Investing in the stock market can feel like stepping into a maze without a map, confusing, risky, and full of unknowns. If you're a beginner, it's easy to feel overwhelmed by all the jargon, market swings, and expert opinions. But what if I told you there's a way to cut through the noise and invest with confidence, using simple principles from one of the greatest investors ever, Peter Lynch? In this guide, you'll discover how to leverage your everyday knowledge, avoid common mistakes, and build a strategy that works for the long haul. Forget about chasing trends or trying to time the market. The real secret lies in patience, research, and understanding the true value of your investments. Get ready to take control of your financial future with insights that can transform the way you think about investing. By the end of this video, you'll have a clear roadmap to start investing like a pro, even if you're just getting started. Ready to turn confusion into clarity? Let's dive in. If you really want to start transforming your financial life, the key is to keep it simple. No need to complicate things. I've left a link in the first pinned comment below. Click there and find out how to take your first step. Believe me, you'll be rewarded with everything you need to achieve success. Peter Lynch has a philosophy that sounds almost too simple, but it's surprisingly powerful. Invest in what you know. And honestly, it makes a ton of sense. Think about how many times you've used a product and thought, everyone's going to want this. That instinct, it could be your edge in the stock market. When you're already familiar with a brand or a company's product, you're not starting from scratch, you're already one step ahead. Let's say you're passionate about tech. You're always checking out the latest smartphones, software, and gadgets. Instead of diving into industries you don't understand like oil drilling or pharmaceuticals, why not start where you're already comfortable? Lynch believed that everyday investors have a real advantage over Wall Street pros because they can spot trends in real life before they show up in stock reports. That's what he called the advantage of the individual investor. Of course, just liking a product isn't enough. But when you combine your personal insight with a bit of financial education, you start to see if that company has real intrinsic value, growth potential, and fits into a solid investment strategy. Investing becomes less of a gamble and more like connecting the dots between your life and the stock market. And yes, it can even be fun, like turning your shopping habits into smart, long-term investing decisions. One of Peter Lynch's golden rules is simple: never invest in a company you don't understand. Sounds obvious, right? But you'd be surprised how many beginner investors skip this step. Before buying a single share, Lynch recommends digging into the company's fundamentals, things like earnings growth, debt levels, and market position. It's not about being a finance wizard, it's about being curious and intentional. For example, let's say you're interested in a retail company you shop at often. Don't stop at "I like their clothes." Look at their profit margins, how fast their earnings have been growing, how much debt they carry, and whether they're expanding or struggling to survive. These clues tell you if it's just a trendy brand or a solid long-term play in the stock market. This is classic fundamental analysis, and it's what separates educated guesses from blind speculation. Lynch believed the stock market rewards those who do their homework. You don't need a PhD, you need a system. Read company reports, compare competitors, and track how the business reacts in tough times. The goal? Build a clear picture of the company's intrinsic value before committing your money. It's like buying a house. Would you skip the inspection just because it looks nice on the outside? Not all stocks behave the same, and Peter Lynch was a master at classifying them. He broke them into categories like cyclical, stable, and growth stocks, each with its own personality. Cyclical stocks move with the economy, think airlines, automakers, or construction. They boom during economic growth and shrink during downturns. Timing is everything with these, and they're not for the faint of heart. Then there are the stable ones, companies that sell things people always need, no matter what's going on. Utilities, food producers, household essentials. These stocks don't skyrocket, but they don't crash easily either. They're like the tortoise in the race, slow, steady, and reliable for a long-term investor who values consistency over flash. But Lynch's favorite? Growth stocks, companies with the potential to expand fast and big. These are often newer businesses or disruptive innovators with rising earnings, loyal customers, and a strong edge in the market. If you can find one early, it's like catching lightning in a bottle. The key is knowing which type of stock you're holding and why. It's not about hype, it's about matching your expectations with reality and crafting a smart investment strategy around it. Peter Lynch often said, "The real key to making money in stocks is not to get scared out of them." And that's where patience becomes your secret weapon. So many beginner investors panic at the first dip or get bored when things don't explode overnight. But Lynch knew that great businesses take time to grow, and so do great returns. Investing in stocks is a marathon, not a sprint. Think of it like planting a tree. You don't stare at it every day, wondering why it hasn't grown a foot. You water it, give it sunlight, and trust the process. The same goes for your investments. Let them breathe. Let them ride out a few storms. Some of Lynch's best stocks took years before they really took off. But when they did, the returns were massive. And here's the kicker. Those who chase quick wins often miss the long-term miracles. Jumping from stock to stock like a game of musical chairs may feel exciting, but it rarely builds real wealth. The patient investor studies, buys wisely, and holds with conviction. When others sell in fear, you wait in confidence. That's how compound growth works, and that's how financial freedom is built, one patient decision at a time. One of Peter Lynch's most powerful beliefs is that the individual investor has a real advantage over the pros. That might sound surprising. After all, Wall Street firms have teams of analysts, mountains of data, and millions to spend. But here's the twist. They're also tied up in bureaucracy, pressure, and red tape. You've got flexibility and the freedom to move fast. Big institutions can't just jump into small, promising companies. They'd move the whole market doing it. But as a regular investor, you can spot a great local business, do your fundamental analysis, and quietly buy in before anyone notices. Lynch called this the edge of the ordinary person seeing value, where the pros are too busy or too restricted to look. And with tools available today, it's easier than ever to do your homework. More than that, you're not stuck in a quarterly performance race like fund managers. You can think long-term, ignore short-term noise, and stay focused on companies you believe in. That's a strategic advantage most professionals envy. So don't underestimate yourself. The ability to invest in what you know with patience and independence can beat even the best on Wall Street when used wisely. Peter Lynch warned investors against getting caught up in the constant buzz of market headlines and trends. The financial news cycle is full of sensational stories, hot tips, and scary predictions. But most of it is just noise. Reacting impulsively to every headline can lead to costly mistakes, especially for an investor beginner who's still building their confidence. Instead, Lynch advises focusing on your own research and sticking to your investment strategy. When you truly understand the companies you own, temporary market swings or media hype become less intimidating. Remember, the crowd can be irrational, full of fear one day and greed the next. Your job is to stay calm and not let emotions drive your decisions. By tuning out distractions and keeping your eyes on the fundamentals, like earnings, value, and growth potential, you build a much stronger foundation for your portfolio. Think of it like tuning into a clear radio station rather than the static of gossip. It's this disciplined approach that helps you avoid the common traps that trap many beginners in the roller coaster of renda variable, variable income markets. Peter Lynch stressed that while diversification is important, it should be done wisely. not just buying a little bit of everything. For an investidor iniciante, the goal is to invest in companies you truly understand and believe in, rather than spreading yourself too thin across dozens of stocks. Quality over quantity wins in the Bolsa de Valores world. Lynch suggested holding a manageable number of stocks, enough to reduce risk, but few enough to keep track of each one's performance and prospects. This approach allows you to deepen your fundamental analysis and spot problems early, rather than feeling lost in a sea of shares. And above all, the focus should be on the longo prazo, playing the long game with patience and conviction. When you combine this with a solid understanding of the company's valor intrinsico and steady lucros, you're setting yourself up for sustainable growth. Remember, investing isn't about quick wins, it's about building a portfolio that grows steadily, riding out the ups and downs of the mercado financiero with confidence and calm. Now that you've learned Peter Lynch's key strategies for investing, the next step is up to you. Are you ready to invest in what you know? Stay patient and tune out the market noise. How will you apply these lessons to build your own path toward financial freedom? Remember, the stock market isn't a get-rich-quick scheme. It's a journey that rewards those who prepare, learn, and act with discipline. So, why wait? Start your investment journey today with confidence and a plan. If you found this guide helpful, don't forget to subscribe and hit the notification bell so you won't miss out on more expert advice. Together, we'll keep unlocking the secrets of the market one smart move at a time.